Good morning, everybody. Today is 5/22, May 22nd, 2024, and I am back with another edition of the Wednesday Investing Systems Live Show. And let's see, I believe I was here last week. So, anyways, Memorial Day. It's Memorial Day coming up. And so the market itself, I expect to be pretty dull the next few days. Other than the fact that Nvidia is coming out with earnings after the bell tonight, and so that's kind of important. I saw something yesterday that said something to the effect of what percentage weighting Nvidia is in the various indexes, and it's extremely significant. So it's going to be one of those earnings releases that potentially affects the market fairly significantly. And so, of course, they've been. I've seen stuff on like the NBC Nightly News about Nvidia. So, anyway, we'll take a look at that in a second, and a couple other stocks that actually kind of look interesting that are going to most likely move one way or another based on Nvidia's earnings. So, anyway, here's the S&P, and as you can see here, boy, these ranges. I mean, just the past few days, the ranges have been extremely tight, very little movement. And of course, I watched the intraday action, and it's been pretty boring. Quite frankly, it's been extremely boring. And so I'm not sure exactly what the deal is, but it's just been a really super boring market. So anyhow, and I expect that to persist, especially given the fact that it's Memorial Day weekend. So we might see some, action between Nvidia's earnings and the open tomorrow based on how the market reacts to their earnings. And so the funny thing is that we've all learned over the years that it's not what the numbers look like, and I mean, sometimes it's the forward guidance, sometimes it's the earning call. um, but anyway, it's basically, and it's how much of what was priced into a particular stock. So it's going to be extremely interesting to watch. But as far as the overall market goes, this is actually a pretty interesting pattern, right? You notice I have the chart set to going back to basically the beginning of what we would consider to be this major bull run, right? Because prior to that, there was, actually a pretty significant dip last summer from August to November. There was a pretty good pullback in the market. I mean, that's the last time that we had, I guess, what you would call a real correction, so to speak. So what I believe we've seen here recently, from basically it was just the month of April, we got a little dip, which makes sense because the market needs dips. The market needs dips and pullbacks and corrections and all that good stuff. But it's kind of an interesting pattern. It's not unusual to see a little dip like that, and then they just bought it right back up, right? So we've talked about this, at length, that the whole idea of basically this entire rally is sort of predicated on the idea that the Fed's going to start lowering rates, which they said they haven't, right? And I mean, it's been like over a year now that the market has basically been rallying on hopes that the Fed would lower interest rates, and until the economy slows down, until there's actual signs that inflation is coming down and the economy itself is slowing down, the Fed says that they're not going to lower rates anytime soon. And so going into this year, there was like 6 rate cuts priced in, and now, the Fed will be lucky to cut rates once or twice this whole year. Probably twice, I would have to say, if at all. It just really depends. without getting into too much macroeconomics here, again, I want to point out this is a relatively bullish pattern, but at this juncture, with this little sort of breakout just above the highs, I do want to point out, and let me find my weekly chart here. I want to point out that at 53.20, inflation adjusted, the market's finally, basically at a new high compared to the beginning of 2022. And I know I've talked about this at length, but basically adjusted for inflation is pretty important, quite frankly, because nominal numbers are one thing. I mean, Dow 40,000 is great as far as a nominal number goes, but in the end, inevitably, everything comes down to, did you make money or preserve purchasing power? And quite frankly, I've talked about this, and I think at some point I might have shown the actual number, but somewhere between 2022 and now, that the 48.18, which was the all-time high back here, is equivalent to about 5,300. And so the market has finally made an inflation adjusted all-time high after 2.5 years. So that's kind of cool. So as CNBC put on their little screen this morning, the market's trying to work on its fifth up week in a row. So, and that's not without precedent. Here's a string: 2, 4, 6, 8. Here's 9 weeks in a row up. Here's 2, 4, there's 5 weeks in a row up. So the market's trying to, and there's that little dip that I was just looking at on the daily chart. So let me go back to the daily chart here. And the daily chart is just basically it's kind of a bullish pattern if you ask me. So this breakout level here, wouldn't surprise me to see it come down and sort of test that. You got the 50-day moving average right there. You got that beautiful W pattern. So that's kind of nice. We talked about that last week, I believe. Anyway, let's look at the let's look at the Nasdaq 100 real quick. Same sort of thing here. You got the Nasdaq 100 with a very similar pattern, breaking out above this high from back in March there, and same sort of thing. I don't really have any lines drawn on this particular chart, although looking at it, I can see all sorts of lines I could draw on it. Nice little dip here, and then just the absolute reversal. So IWM, let me go down and look at, I have the IWM actually a marked up chart, so I think I haven't looked at that in a while. I haven't looked at my marked up chart of the Russell. So yeah, interestingly enough, the Russell, wow, this is interesting, has pushed back up towards these levels from several years back. Right? It spent all of 2021 chopping around in like sort of this box here, and I extended the box out just for the fun of it. And yeah, occasionally I adjust this. I don't know why I moved it up, but I used to have that box like down there. Sort of right about 200. Yeah, there we go. I had this right about 200, and anyway, so looking back several years on that, it's interesting to see that it's finally climbed back into that box, right? It's got quite a bit to go and a long ways to go, and I'm not sure that I would expect that it's actually going to, well, it doesn't look to me like it's going to new highs anytime soon. And of course, we all know the reason for that. And the reason for that is that, it's the mega cap frequently talked about stocks, the Magnificent Seven, all that kind of stuff that are essentially driving the market, and the other 2,000 little stocks nobody really cares about that much. So I suppose that's in a way it's a positive sign because when the Russell is like rocking, Um, that's an indication of a lot of animal spirits and speculation and that type of thing. So anyway, let's move on to the biggie here. Since Nvidia is coming out with earnings after the bell tonight, this is going to be the oh jeez. A while back, at some point, I used to be able to just scroll my mouse and zoom in and out on these charts, and then for whatever reason, they did away with that, and it's too bad because I kind of actually like that. So what we got here is a pretty classic pattern, right? You got you got like this little zone here of the all-time high, and boy, I'll tell you what, it's going to be super, super interesting to see what the reaction is to the earnings here. Because it couldn't be in any more of an interesting spot. I mean, it's right up against the all-time high, and this is a daily chart, and yeah, so there's the beginning of the year, right? Apparently, at the beginning of the year, this became like the go-to stock. And of course, in years past, but there's something to be said for this. See, this is the play on AI, and they have the most powerful, um, graphics chips and all that good stuff. So anybody in the computer field, people that build their own computers and PCs and gamers and all that stuff, NVIDIA is a household word, right? Kind of like Intel used to be back in the day. I mean, you would see, geez, I remember back in the 90s where, you'd see Intel commercials, and one of my one of my buddies commented to me that it was weird that you were seeing commercials on TV for a product that, you couldn't even buy unless you were buying a computer. And so that was kind of interesting. But anyway, I've talked about this before. Imagine for a moment, let's look at a longer term chart of Intel. So Intel's a Dow component, right? Look at the 2024 performance of Intel. Actually, let's zoom way back. Look at Intel going back, all these years. It's literally, I mean, it's been a terrible investment. It's a Dow component. Think about that. So obviously, with the Dow being price weighted, Intel makes no difference whatsoever to the Dow. But just imagine that someone had the foresight at some point in the last, 6 years to replace Intel with Nvidia. Imagine what the Dow would be at like 50 something thousand, 60,000. So anyway, that kind of, you know, I always think about that when I look at these nominal numbers, and something interesting to do if it's interesting to you, is to go to Wikipedia and pull up historical Dow components and look at the changes over the years. They've got it back since the beginning of the Dow, and that's pretty interesting because, to me it's very arbitrary. It's very arbitrary, like the components of the Dow and this and that. But my point here is like you look at this chart and you think, wow, hey, maybe they should kick Intel out of the Dow and add Nvidia, right? Because man, what a difference that would have made, right? Heck, the Dow might be at 70,000 if they had put it in back here. And plus, look at the price weighting. Intel's a $30 stock. This thing's $950, right? Um, so I'll tell you what would be interesting is if they came out, if Nvidia comes out with good earnings and there's a positive reaction, and if they announce like a stock split, which is not out of the question, right? $945 stock. I mean, they could do, 2, 3, 5. Heck, they could do a 10-for-1 stock split. Make this a $95 stock. This thing would just blast right through, 1,000. So, yeah, I don't know. Typically there's like a value. there's a value that the options players have that will say, what the expected move is, right? What the expected move is on a stock when earnings come out, and so it's probably, well, I'm not even going to guess, but it's a significant percentage. So this is a pretty volatile stock. So anyway, this thing's either, you know, people are placing bets on whether it's going to be 1,000 or whether it's going to be 900. And I mean, I can't imagine betting against it, but hey, you never know, right? You never know. But this is going to be a big deal. And so what I wanted to look at real quick was I wanted to look at a couple other chip stocks here. We looked at Intel, and boy, it looks like garbage. But man, I'll tell you what, AMD's got well, it's got this W pattern, right? And so this is AMD is looking pretty darn good right here, like right at this spot here. And I mean, quite frankly, AMD is like set up for another big run back up here towards 200. But of course, everything's going to depend on Nvidia, right? But what a great setup here. So, we've talked about like the W pattern and how, and this is the W pattern, right? You get a sell down and then you get a bounce and then sort of, it's a little convoluted because of that gap down. I don't remember what that gap down was all about, but anyway, you can see it. And so the price is now poked above the midpoint of the little W pattern, which in my opinion is one of those powerful patterns out there, right? I mean, and it's always suspect. That's the funny thing. I remember, years and years ago seeing, really super significant market sell-offs and then seeing that W pattern sort of form, and I always second guess it. I'm like, well, for whatever the reason was, the market sold off. It's still going down or whatever. But and then it just turns around on that W pattern, and so you've got the same potential thing here. I would say if it wasn't for Nvidia's earnings coming out, I'd say that this thing's set. Look at the 50-day moving average, right? It's like just now coming back, but it pulled back to the 200, which is pretty amazing because AMD's been a really strong stock. So, and here's the thing, I don't follow all the fundamentals and all the different little nuances of it. I'm just looking at that chart sort of objectively, and it looks to me like it's carved out a pretty nice bottom and that it's formed the W pattern. And so if Nvidia gets a positive reaction, I expect AMD to break out and form that big cup and trend back up towards 200. So we'll have to see on that. And then the other one that has an interesting look is ARM. It has a pretty interesting look to it. I mean, it's the same sort of thing. It's not really a W. It's not a W pattern, but it had the IPO and then this big blast off and consolidated that. They didn't quite fill the gap. It doesn't look like. Yeah, I mean but it was close enough, right? It came back down into that gap, and I'm not even sure why, to be honest with you, but it's got a pretty good little setup right here. It does, there's a potential sort of bear flag, I guess you would call it. Not really a bear flag, but anyway. So this is another one. If for whatever reason Nvidia has a positive earnings release and this little consolidation breaks to the upside, and there's that 50-day moving average, just like with AMD, then I would expect, this could rally back up to. There's a lot of overhead resistance in this. I sort of like the look of AMD better. Micron. Let's look at Micron. Micron had I saw some positive news on it recently. It's got like this double top thing going here, right? And so, here's another one that the whole chip sector in general. I guess I should just be looking at SMH, but it's kind of fun to look at these individual patterns. So there's Micron, same sort of thing. This is kind of double toppy. I mean, it's honestly looks like it wants to pull back, but it had a really nice run after, See, I see a pattern like that. I mean, that's like a toppy looking pattern. I would have almost expected it to continue down and fill that gap, but it didn't. So, so there you go. And there's a whole bunch of other chips, I mean, that we could look at, but probably the best thing, look at Texas Instruments. I just absolutely on a tear there, right? That's the amazing thing is that sometimes certain stocks, brand name type stocks, they can trade sideways for eons, it seems like, just do absolutely nothing. And then this actually kind of looks like their last earnings release, right? Gapped up and just took off. So, real quick, look at SMH here. And SMH, has a kind of a similar pattern to Nvidia. And the thing of it is, this is a much tamer way to play it. Um, you can see the increments on this chart of $10, and so percentage wise, if Nvidia knocks it out of the park, well then SMH is gonna bust out and take out this previous high here, and vice versa. So quite frankly, it's a coin flip. We've always over all these years, that we have never been big proponents of buying stocks ahead of earnings or gambling on what a stock's reaction will be to earnings. Some people like to do that, and I suppose it's viable in certain instances. And obviously, people that have been holding that stock for a while, you're not just going to sell the thing. See, that's the other thing too. There's a difference between trading, swing trading, and holding a stock. And if you get into stock and you hang on to it for a while, you're not just going to bail out because the quarterly earnings are coming out. So you just grin and bear it. And the longer you've been holding Nvidia, then the less it'll matter how it reacts to these particular earnings. So anyway, interesting stuff. It's got a big weighting in the Nasdaq 100. Going back to the S&P, let's look at I want to look at the SPY real quick here because I saw something and I don't have volume on this chart, but it's funny I don't really have volume on any of my charts. It's just like I'm not a well, here's the thing is like I'm about to talk about volume, but I don't really have it on my charts as and give it that much significance because I kind of know. And here's an interesting fact. Yesterday, the SPY had the lowest volume of like a non-holiday, like those half a days. It had the lowest volume of a non-holiday week since like 2017, which is insane. And the only thing I can think of is that it's we're heading into Memorial Day weekend, and so people are just not really interested in trading or whatever right now or something. I mean, I don't know what, or maybe all the action is in the Bitcoin ETFs or something like that. But it's a little concerning that the volume. And well, hang on. I guess I could probably add volume to this thing really super easy and just look at it because that's kind of weird. I mean, to me, so I added the volume and it's way down there. It is. It's way down here because I have the MACD on this chart. Let me see if I can pull it up here. There we go. There we go. Yeah, it's a little bit different of an animal when I'm broadcasting. But anyway, so there I mean there you go. Look at that volume bar from yesterday. I suppose I could even pull it up more. Yeah. That's just an interesting stat and it's a head scratcher, right? I mean, it's look at me zooming back on this chart, and you can still, you can still make out yesterday's volume down there. And if I zoom out here, yeah, that's crazy. I mean, even, there was, look at the end of the years. Well, that looks like some pretty low volume, but that might have been a holiday. So anyway, the point was, is that I can't explain, and it makes me wonder why the volume would be so low. I mean, obviously, besides, it's Memorial Day weekend, so maybe, there's stuff going on out there, but it's not a good sign because obviously, let me get rid of that. We want participation in the market. We want you want maybe people are trading something besides vol or besides SPY, but this is kind of weird because I had noticed myself. Get my chart fixed up here. I had noticed myself that the market was extremely dull intraday yesterday, and I'm just chalking it up to, upcoming holiday weekend, whatever. Maybe everybody's waiting for Nvidia's earnings to come out or something like that. I don't know. But so that's the big thing. And then of course, there's Fed stuff coming up. And I believe the expectation now is that the Fed is not going to lower rates at their next meeting. So there's been a lot of Fed speakers lately, and they've basically said they need more data. Right? Need to see, well, we need to see inflation come down more, right? I mean, and of course this is an election year, and so everything's always wacky in an election year, and especially as dysfunctional as sort of the current environment is. It makes me wonder if, the powers that be aren't going to either A, hold the market up, or B, intentionally do everything they can to make the market look great going into the election because they want the incumbent to win. And I mean, so, in this modern day and age, I don't put anything past anybody, right? So, I'm not a conspiracy theorist, but I do believe that market manipulation to some degree occurs. And so you just don't, you never know how deep that goes because obviously, there's institutions out there that, are trying to move the market in their fit. That's been going on forever, right? I mean, you've heard Kramer talk about that. Like they would put in certain orders to make it look like a stock was, going down so they could load up on it, and then they'd go on TV and hype it up so that they could dump shares on. I mean, that's been going on since the beginning of time. It's a mind game. But anyway, going into the election. So, the Fed claims to be completely apolitical, but I'm not sure I believe that, and I don't think anybody else does. And the other thing is that, with Yellen as the Treasury Secretary, who used to be with the Fed, it's like Fed and Treasury are kind of more in cahoots these days than they ever probably have been in the history since 1913. So you never know. Anyway, I pulled up the Apple chart here just to kind of get an idea. Big, gigantic sideways trading range. This is another interesting sort of thing. I saw I saw a comment the other day to the effect of, Apple's hyping up. Actually, I've seen a couple of new Apple commercials, but I saw something to the effect of, Apple's like making a big deal that they're coming out with a couple of new different colored iPhones, and that, and I haven't seen a whole lot about, I haven't seen a whole lot about those VR headsets that are like 3 grand or whatever, and so I can't imagine actually wearing one for more than a very short amount of time. So I don't know how big of a hit that's actually going to be. All the hype surrounds AI now. Everything's AI, AI. So, and when NVIDIA does their conference call, they'll probably mention AI 1,000 times, thousands of times. So, I think I talked about this a couple of weeks last week or a few weeks back or whatever. I took a little hiatus from doing shows because I had stuff going on. But anyways, AI is definitely changing the world. But whether it's I could do a whole we could do a whole conversation on that. But whether it's all it's cracked up to be or not, I saw something yesterday where it said there was like a significant portion, say half of like coding questions, like programming questions that were asked of Chat GPT or whatever were incorrect, right? So that's the thing about AI is like at this point, I don't necessarily trust it because there's a lot of there's a lot to left to be desired, right? My interactions with my cable company, which I'm assuming, well, they call them chat bots, right? Is absolutely the worst experience in the world. I mean, it's just abysmal. And so AI is, for one thing, AI has the potential to just destroy the internet and just water everything down and make it garbage. It's already doing that. And interacting with a dumb AI, which are prevalent, is just the worst experience in the world. So it's definitely going to change things, but I can't imagine. I would say that there's a big trade-off between changing things for the better and the worse. A lot of this technology, that modern technology, has changed things for the worse. It's made like simple, basic stuff like super complicated, which is stupid. So, anyways, I don't want to get into all that in this conversation. Anyway, take a look at Apple there. Going on, well, what's that? About 4 months of a big consolidation range. So that's kind of interesting. I'm not sure what the catalyst is going to be, other than the fact that I believe when they came out with earnings back here, they announced the dividends and buybacks and all this stuff. I saw this morning about something about they're talking about the rate cut probabilities here. So it looks like one or two. I mean, that's the whole thing is like we're living in some sort of crazy world where the main thing that matters to the market is whether the Fed's going to cut rates, even though the market like has been going up and up and up and hitting all-time highs as they've raised rates. And so it's that's pretty crazy. I was going to look at one more thing. I was going to look at Microsoft here because Microsoft breaking out to new highs here. Um, Breaking out to new highs. I believe they have some sort of big presentation thing, and they're announcing AI computers and all that stuff going on. So apparently my phone's ringing off the hook, and I've gone 30 minutes here, so I'm going to wrap this up. Microsoft's got that same sort of look to it, so we'll have to see what happens there. Anyways, hey, have a great Memorial Day weekend, long 3-day weekend. Enjoy yourself, and I will see you back here next week. Same time, same place.